7 Secrets to Investing, like Warren Buffett, a practical guide. Welcome to the channel, everyone. Now, let's be real, who wouldn't want to invest like Warren Buffett? This guy's a legend, right? But here's the thing, you don't need to be a financial wizard or have millions in the bank to follow in his footsteps. Today, we're breaking down the 7 key secrets to investing like Warren Buffett. Whether you're just dipping your toes into the stock market or you've been at it for a while, these strategies can help you make smarter investment decisions. So buckle up, grab your notepad, and get ready to learn how to invest like the Oracle of Omaha himself. Buffett's most famous concepts. The idea of an economic moat. Think of a moat like a castle's defense system, except instead of protecting a king and queen, it's protecting a company's profits from hungry competitors. Buffett looks for companies with wide moats, businesses that have something special that makes it tough for others to steal their market share. This could be anything from a powerful brand name that people know and trust, like Coca-Cola, to a unique technology or patent that gives them an edge, like Apple. The point is, a durable competitive advantage gives a company pricing power and protects its profits over the long haul. He wants to invest in companies that are built to withstand the test of time, not companies that are here today, gone tomorrow. So when you're analyzing a potential investment, ask yourself, what makes this company special? What sets them apart from the competition? This next secret is all about patience, something most people in today's fast-paced world seem to be lacking. We want it all, and we want it now. But when it comes to investing, that kind of thinking will get you into trouble. Buffett is a long-term investor. He doesn't get spooked by short-term market fluctuations or jump on the latest investment fads. He's in it for the long haul, and he understands that true wealth is built over time, not overnight. He once said, "If you aren't willing to own a stock for 10 years, don't even think about owning it for 10 minutes." This means tuning out the noise of the market and focusing on the bigger picture. Remember, time in the market is more important than timing the market. Because as Buffett has proven, slow and steady wins the race. All right, now we're getting to the heart of Buffett's investment strategy, finding undervalued companies. Buffett is a value investor, which means he looks for stocks that are trading for less than they're actually worth. He compares it to buying a dollar for 50 cents. Figuring out a company's true worth, or its intrinsic value, can be tricky. It involves analyzing a company's financial statements, understanding its future earning potential, and discounting those earnings back to the present. The key takeaway here is that you shouldn't just buy a stock because it's going up in price. You need to understand its underlying value and make sure you're not overpaying. As Buffett says, price is what you pay, value is what you get. So, before you hit that buy button, do your homework. Don't let emotions or hype cloud your judgment. Chapter 5. Invest in what you understand. This next secret is all about staying within your circle of competence. Buffett is a big believer in sticking to what you know. He avoids investing in industries he doesn't understand or companies with overly complex business models. He once said, "I don't look to jump over 7-foot bars. I look around for 1-foot bars that I can step over." In other words, he focuses on finding opportunities where he has an edge. This doesn't mean you have to be an expert in every industry you invest in, but it does mean doing your research, understanding the basics of the business, and making sure you're comfortable with the risks involved. Stick to your knitting, as Buffett would say, and focus on finding opportunities within your circle of competence. Chapter 6. Minimize risk by avoiding debt. Now, let's talk about risk management. Buffett is a big believer in protecting your downside. He understands that even the best investors make mistakes, and he's always looking for ways to minimize potential losses. One of the ways he does this is by avoiding companies with too much debt. He knows that high levels of debt can be a recipe for disaster, especially during economic downturns. A company with a lot of debt is like a person carrying around a ton of credit card debt. Buffett prefers to invest in companies with strong balance sheets, meaning they have low levels of debt and plenty of cash on hand. So, when you're analyzing a potential investment, take a close look at their debt levels. Remember, protecting your downside is just as important as finding great investments. Chapter 7. Learn from mistakes and stay disciplined. This last secret is all about having the right mindset and sticking to your guns. Even Warren Buffett, the Oracle of Omaha himself, has made his fair share of investing mistakes. The key is to learn from those mistakes, adapt your strategy, and never stop learning. The market is constantly evolving, and to stay ahead of the game, you need to be willing to evolve with it. But learning from your mistakes is only half the battle. The other half is staying disciplined and sticking to your investment strategy, even when things get tough. It's easy to get caught up in the hype of the market, to get greedy when things are going well, and to panic when the market takes a dip. So develop a sound investment strategy that aligns with your goals, risk tolerance, and time horizon. And once you have that strategy in place, stick to it. That's it for the 7 secrets to investing like Warren Buffett. I hope you found these principles helpful and feel inspired to apply them to your own investment journey. Remember, investing doesn't have to be complicated. If you enjoyed this video and learned something new, hit that like button and subscribe to the channel for more videos on investing, finance, and building wealth. And be sure to let me know in the comments which of these principles you're most excited to implement in your own portfolio. Until next time, stay informed, stay invested, and keep learning. Thanks for watching. If you found these tips helpful, make sure to like, subscribe, and hit the notification bell for more investment insights. Happy investing!